So we love this theme, and it's going to become, very important. And I think you're going to see this on the front page of many global publications, above the fold, page 1. You can be investing in copper right now because it's still buried in the back, back in page 16, but it is coming to the front page of every media publication, because simply put, it is the enabler of electrical energy, and electrical energy is the Green New Deal. When you take emissions out of global energy, the way we create, transfer, and utilize it, it's electrification. And this theme, just to put it in context, there's a lot going on here. Don't be confused by it. I'm trying to show you one thing. The point is today, final energy usage, only 20% of that is electrification. And we are going, and you can use any forecast or any sort of guidance going in the next 30 years, but it goes to 50% becomes electrified in our world. This is actually going to happen probably faster because of all this COVID stimulus, the Green New Deals. There's many countries are talking about this. So rather than a 30-year investment, you're going to see a lot of this manifest itself in the next 15, 20 years. You don't have to like it. It's a bumper sticker issue maybe that you don't like or you don't care about. For me, I'm an investor, and I understand how much copper it took to install the electrical network of the world today from 1890 to 2020, and it's only 20% is electrification. The delta in that next 30%, I mean, the CapEx, you can't model it. It's so magnificent. It's going to be done together with copper and aluminum. And if they've actually already, some analysts have already looked at the CAGR growth rate. What will it require to have a middle of the road scenario for copper demand to enable some of this electrification? Now, I'm not talking about the crazy scenarios or the epic fail, but just middle of the road. It's going to be a CAGR growth rate in the demand of copper at about 6% per year. And if you look at the historical average from 1900 to all the way through the China super cycle, it was maybe 4%. It's significantly more than any of the best times we saw over the past 120 years. And net, the rule of 72, the demand for copper, which is currently a 25 million ton market, will go to about 40 million tons in the next 15 years. Where will this copper come from? Not going to talk too much about the basics, but electric cars take more copper, 400% more. When you're talking about offshore, onshore wind, it is a power of magnitude more copper in all of these things that enable electrification and the storage of electrical energy. Because that's now where we're going to start commingling the two of them together, which is AC meets DC, DC being the batteries for the backup power storage. And the numbers will be enhanced, but even today, even before all this begins, of all the copper that's produced in the world, 75% is fabricated into something to generate, transfer, or utilize electrical energy. This now goes yet further. Even more things are going to be fabricated into copper. Can we use aluminum, and where will aluminum be a substitute? The fact is, in the world's electrical networks, many things we only use aluminum because it's light, and many things we only use copper. And it is true, there are certain overlaps where we can use either or, what's cheaper. But as we actually look at this integration of alternating current with direct current, and more importantly, ultra high efficient products, you can't use aluminum for that. You're not going to have stupid energy inefficient generation, transfer, and utilization when you can use copper. And there is a price incentive, which is 3.5 to 1. And if you look at the second part of this, aluminum as substitution, don't talk about plumbing tubing. We have been substituting plastic since 40 years. We're not using as much copper in that industry, and that's always been the case. But when you're talking about big power systems, you simply cannot substitute the aluminum, or it's not as easy, or it's just the price incentive just simply is not there. The answer is we're going to use aluminum and copper, but there is no other thing. Copper is simply the only conductor for all of this electrical energy, and that really is something I cannot emphasize enough, and it cannot be underlined enough. Some people think that we'll be able to recycle a lot of copper. Not exactly true. We've always used scrap copper. We've never thrown away copper, not Julius Caesar, not Napoleon Bonaparte, and to this very day. The single best year that scrap copper provided to the market was after in the China super cycle, where copper prices really took off. In the peak year, 24% of copper supply came from recycled copper. So is it plausible that we could have something today? It's about 17, 18. I could see that increasing. It's not going to save the day. We're talking about an extra 1 million tons a year on a 25 million ton a year market and growing, where it's going to be really hard, because when we recycle these products, they're typically remanufactured, and we're making something that actually requires more copper. Warren Buffett loves businesses that have these moats, and copper mining is actually a fantastic business because it has incredible built-in moats, more than one. And the first one is it's geologically scarce. The fact is, copper at commercial availability, it has always only occurred in a few places, and the future of copper will continue to be either at high elevation in the Andes, Chile, Peru, a little bit of perhaps Ecuador going forward, or it's going to be in areas of much higher political risk. Or they're going to have to go, major mining companies that is, are going to have to go to areas that have established mining camps, that have all of this infrastructure basically in place. I'm talking about Arizona and Nevada and Australia, British Columbia, even Quebec, where, you know, maybe there's some other things that aren't so, you know, attractive to the deposit, but you save so much money with the workforce and all the infrastructure that's already there. And they have a choice to make, because when you look at it, and this is a very special list, because what you're looking at here in the pink box are the countries where the world's development projects are located. Let me be clear. These are the projects that are now financed and going through development to actually provide the world copper between now and the year 2027. Peru, Chile, areas that have a lot less political stability, and not a lot of it is in established mining camps. The second part to glean out of this graphic is the amount of capital that's going to be required. About $65 billion in today's dollars is the sort of estimated capex by these major mining companies, and it's going to yield about just over 3 million tons a year. Now remember, if copper's growing by 6% on a 25 million ton market, that's not going to cut it. Still, you're looking at a lot more capital to build these projects, and we are now going to start seeing some cost inflation. And the location. The copper geographically only occurs in certain places. So investors really have to start looking at a comparison between the oil industry and the copper industry. We know the demand is different, because when you go away from fossil fuels and oil, you're using something that's more electric and is going to consume more copper. They're actually directly inverse. But the world's oil supply actually comes from over 4.5 million individual wells, from the biggest ones of Saudi Arabia to the little mom and pop in Alberta, Saskatchewan, or Texas. Where copper mining, actually about 20 mines give us 45% of primary supply. And if people thought we relied on Middle East oil, wait till they realize that 40% of primary copper supply comes from Peru and Chile. That is not on the front page of most global publications. These are the world's biggest oil reserves. I'm not trying to have you focus on that. I really want you to look at countries that simply do not have a petroleum endowment. I'm talking about Japan, China, a growing India, Germany, Italy, and all the other industrial superpowers of the world. They now, overwhelming pressure, pollution, global warming, Green New Deal, COVID stimulus, call it what you will. But the technological advancements that have occurred in those networks at least make it plausible that in the next 15 to 20 years, they can slowly consume less oil for transportation fuels, whereas we can use the oil supply for enhanced value products like plastics, petrochemicals, fertilizers, cement, and all the other things that are also, you know, far more valuable than simply refining a barrel of oil into diesel, burning it, and repeating that process week in and week out. So the second moat that the copper mining industry possesses is it's technical. There has been a dearth of technical innovation and exploration sort of the development of that industry. We know this, and we've looked at the lack of success in the past decades in comparing that to oil. Traditionally, you used to only get 8 or 10% out of oil out of a formation. This is the way they used to drill for oil, vertical. And then there was horizontal fracking, and then they got longer and longer fracks, more and more directions, where they're able to get a power of magnitude more oil out of a formation. So this really was a game changer. They reinvented the wheel. And this industry now has, as long as you have the right oil price, call it $60 or $70, this was a game changer. Copper mining has no such game changer. And when you see what happened to U.S. oil production, because they weren't quite able to go around the world, and there's a lot of formations it's not going to work in, but certainly we saw what happened. They tripled oil production in the United States in a decade. There has been no such doubling, and there will be no such doubling of copper production out of Peru or Chile. We need to understand that the grade of copper has fallen consistently, or to put it more bluntly, there's simply no copper in the rock. The concentration in a ton of copper, the future reserves is between 0.3 and 0.4%. Where's your innovation? We already recovered 92, 93% of the copper out of the rock. We had a lack of success, and it's not from lack of trying. So when you look at these are 20 projects or 19 projects that are not owned by a major. I think there's been a couple takeovers here, but basically the juniors, the future resources and reserves of the copper industry are conclusively below 0.4%. In fact, it's 0.3. And this is not from lack of trying. When we look at how much money we as an industry spent during the China super cycle, here's the graphic. The line is the dollars spent year by year. This is from Rio Tinto, right out of their presentation. The bars are the success. Where did we find a world-class or tier 2 or tier 3 deposit? We spent an ungodly amount of money looking for copper. We did not have a lot of success as an industry. So you cannot underline enough the importance of appreciating this graphic. I do not believe, like the past cycles, just because the copper price goes much higher this time, they already did that. They already scoured the earth. We simply didn't find, certainly not a lot of world-class deposits, but even when you go down to the tier 2 and tier 3. So what we've done at Copper Bank, we focused at acquiring really well-situated tier 2 projects, because we firmly believe that the major mining companies know this. They're not going to go on a global expenditure again in the middle of nowhere. They're going to focus on what has been found, and they're going to go back and try to enhance those projects. So there's my favorite little graphic that you talked about, Carrie, and it's from Ben Graham. And you have to be patient, and in real estate, you always make your money on the buy. And we bought from pessimists, and I believe it's going to be a very optimistic market. And I think we're coming in for the next 1, 2, 3 years of what could be perhaps the best copper market we've ever seen. And there's an arbitrage there, where people that maybe don't follow this day to day, and maybe these experts in energy, they certainly don't talk about it. At the world's biggest Congress for people in the energy business, which is in Houston, Texas, at Dan Jurgens Sarah Week, you pay $10,000 to get a ticket, just to give you context. They talked about it the last 2 years, in not 2020 because of COVID, but 2019 and 2018 and 19, it was all about renewable energy, innovation, the Green New Deal, all these kind of things. Did you know that the word copper doesn't get a line item? I don't care, but they will. This comes home to roost. My Bloomberg interview from 4 years ago talked about the upcoming, and this you have to look at it in a decade or 15 years, but I do believe that oil and copper are decoupling, and they will decouple, and that is conclusively happening. So my interview took place in 2016. You can see that here on the graphic. This is a 20-year price chart comparing oil and copper. And oil is the dominant commodity, and when it raced higher, many commodities went higher, lower, and you can see this continuing. But there is a decoupling occurring now. And yes, there's a reflation trade going on, and everyone's talking about a commodity super cycle, but this one will not be like the others. If someone has $1 billion invested in a commodity index fund before, 80% of that went into oil and gas. That's not going to be the case anymore. Either you have divestment, they won't allow them to invest in fossil fuels. There's many endowments that are like that. Or B, people want to invest in the future. They want to invest in the enablers of electrification. A lot more of that money in the future is going to go to mining and mining things that produce electric metals. So I believe because of engineering, not because of politics or anything else or hyperbole or promotion, but because of the engineering, because we have to, as an industry, enable 0.3% copper deposits. And the only way that's going to happen, a little bit through innovation, technology, but really it's a higher copper price. You have to enable a 0.3 copper deposit at 4,000 meters in the Andes. I'm telling you, you're going to see copper well above, in my opinion, that is, above the old all-time high. Now, if you could see the absolute peak here, $4.50 copper back in 2011, if we do see that, or if we see $5 copper, do you believe oil's going to be $150 a barrel on that same day? Maybe. I would say oil is predominantly going to be driven by politics going forward. Can we have $100 oil? Absolutely. 150? Absolutely. But it won't be fundamentals that drive it there. It's going to be politics. And can it stay there for a sustained period of time? What I'm trying to articulate to you or share with you is that I believe copper is going to surpass its old all-time high, in my opinion, and stay there, because it's going to have to be able to enable all of this to come forward. So the number one rule in commodity speculation, well, it doesn't matter, my friends, until it matters. And then it starts to matter a lot. And we've seen that this year. Did you know that the world's biggest buyer of copper is China State Grid? China is now releasing its 14th five-year plan. Now, this company has 1.1 billion customers. Their spending, because of their Green New Deal, is going up starting this year by 50%. Now, they are the world's biggest consumer of copper. They buy almost 3 million tons of copper a year. Now, I haven't done an analysis on this, but if the world's biggest buyer of copper is going to spend 50% more on their business, now I'm willing to speculate that their consumption of copper is going to increase by 1 million or 1.5 million tons starting this year and every year going forward. And that'll be the same. This will be echoed with every company that is in the electricity business and the companies that feed into it, be it if you make cables, windings, transformers, across the board. They are all going to be using more copper. GM said that they're now going to go, by 2035, no longer sell the internal combustion engine. Is GM going to use more copper? If you build more wind turbines, you can go across the board. But what you see here is already manifesting itself in the markets. This is a 4-year price chart of copper superimposed by warehouse levels combining SHFE, COMEX, and LME. We are now at multi-decade lows in warehouse. And just like I've said in many, many interviews before, the fabricators, who comes in now? The speculator. They take material out of the system, not for fabrication, but for hoarding and for investment purposes. So now they have to buy over themselves, which is why copper is at $3.78 a pound. And in my view, because this speculation trade, fortified by the fabrication, high demand trade, fortified by the COVID stimulus and the Green New Deal coming this year and the years after, all of this is coming and the planets have aligned where there's no telling what can happen to the copper market going forward. So during the China super cycle, the world's largest integrated miners spent collectively on the 5 major electric metals about $600 billion. They need to spend between now and the year 2035, once again, middle of the road scenario, no crazy Green New Deals, no over COVID stimulus, but just going middle of the road where we're going. They need to spend, because we're going to require this much more metal. You can see here, the 23 million tons more copper is required in the next 15 years. They will need to spend 1.7 trillion, or 3 times more capital investment than the entire of the China super cycle. Now, they could be wrong. They could be wrong by a lot. It's still a tremendous amount of capital that's going to have to be allocated, and they cannot do this because projects are not economic at $3.50 copper prices. So that's where Copper Bank comes in. This is where our business model is going to shine. We are now going to polish what we own. We want to de-risk them. We want to come to the fold and move the ball down the field and actually contemplate some drilling programs on the portfolio. We've been working hard at the computer desk and reviewing the evidence, the science, the data. We certainly have a lot of that. We got at Copper Creek 220,000 meters of drill data and 86,000 meters of drill data at Contact Copper. And we are now putting people in the field to come up with studies, reviews, potentially update some of our historical documentation, and present to the market future drill programs. So this is the project we acquired from Red Hot Copper. You can see we paid, I paid about 5 million Canadian dollars for the project. They invested $85 million, and the market cap high was well in excess of 120 million. So we believe there's an opportunity to unlock a significant amount of value on what we believe is one of the more interesting copper porphyries, and based on historical documentation, it's actually one of the largest undeveloped copper porphyries in the world, certainly in that top 20 or 30. So, Mark, if you want to come in now, if you want to maybe explain a little bit your background, and this is the famed copper corridor in Arizona, and it happens. There are two major geological trends that occur for all the big copper operations in the state. And Copper Creek, which is our project located here, and you can see it here in the red box, it's exactly in the intersection of these two major trends, which makes it a very complicated, very large geological system. And Mark, maybe you can come in and just explain to people some of your views on the area, and then we'll dig in a little deeper into the actual project at Copper Creek.
Sure, and thank you, Gianni, and thank you everybody who's tuned in today. The Southwest U.S. copper province will always be front and center as a destination for copper exploration companies. There's no doubt about that. It has to do with the historic production and the high knowledge base that we have of porphyry copper deposits in Arizona in particular. And Copper Creek sits right in the middle of the action. We have a major northeast trend of major deposits, starting with Silver Bell, San Manuel, which is a historic Freeport producer, is just 10 miles across the valley from Copper Creek. And then that trend extends on into the Safford and Morenci districts. And let me point out that particularly in areas to the northeast of Copper Creek, a lot of companies are starting to pay attention to that terrain. But also then in the northwest orientation is a series of prospects and mines that extend from north of Resolution, which is 75 kilometers, through the Ray operation. Between Ray and Copper Creek, there are dozens of prospects and historic mines. Then we get into and that trend in mineralization actually extends off to the southeast of Copper Creek too. It doesn't end at Copper Creek. This intersection of major deposits and mineralization is very real. And when you look at the mineralization in Copper Creek, there is a very strong northwest orientation. And if we'll go to the next slide here, Gianni. This is our land position, and from that you can see that we have a mixture of unpatented claims on BLM ground, state land, state prospecting permits, private land that is owned, and patented ground which Copper Bank owns outright. And in this picture here, you'll see the current open pit outline as it was proposed in 2012. But within that, you'll see the two resource outlines at 0.2% copper in blue, and the most significant one is the 0.5% copper outline in the magenta. But you'll see too that we have a quite large land position. It's 16 square miles. And we have competitor activity now, not only on our north, but to the northeast, directly to the east and to the southeast. We have three other companies active in the area that I fully expect we will hear from in the next year regarding our land position. It's an exciting time to be working in central Arizona. But the mineralization as if we'll go to the next slide, Gianni. The mineralization as you see it here, the focus of the current exploration program will be in the northwest quadrant of this map and then extending off to the southeast. And I'm looking at, I've got 30 drill holes laid out right now, of which I will need to cull that down to about 12 or 15 high priority drill sites. But you'll see that the district is peppered with breccia pipes and mineralized breccia pipes. The Copper Creek district has over 400 documented breccia pipes, of which about 30 of them have actually been drilled. And as far as finding high grade resource, identifying mineralized breccia pipes is the key to moving the district forward. And there's certainly been historical production and exploration on the breccia pipes that you see in the northwest coordinate of this map. So we're focusing in on finding more breccias, drilling some of the ones that we know about and some of the ones that are undrilled, and the large majority of breccia pipes in the district are undrilled. And this picture off here to the right is no exaggeration. There are breccia pipes with silicified material sticking out of the ground and absolutely coated with copper oxides. And everybody knows it doesn't take a lot of copper to create a mineralized outcrop like this, but it's definitely an indicator of an awful lot of copper in the Copper Creek system.
Yep. No, absolutely, Mark. And I think people, just to give people another, so what we're talking about, this is the historical resource of which projected to surface, if you will.
Right.
Now, this entire area here, if I give you a cross section, that would be here. This is the surface area. Follow my cursor. So this area is unknown. All this area, all these areas here are presumed to be waste. This is our focus. So if we look at all of this terrain with all of these breccias, we feel that right now it's considered waste. It would be a pretty sour outcome to have that lack of success on the drill bit if we were to go and actually focus on these breccias in this area here near surface and try to find more resource. Grade wise, if I look at the actual table, this is a historical mineral resource estimate. Copperbank does not consider this to be current, but it was done to 43101 standards. It was done by a very good group out of Tucson, Arizona, Joe Keene and that group, they're independent mining consultants. And you can see here the grade. So even if using a higher cutoff grade, in the measured and indicated, look at that, 0.54% copper. I already showed you a table in those other areas, high in the Andes, areas that require more security. You know, the global average is less than 0.4. Here's a project in Arizona, in the copper corridor, with readily available workforce infrastructure and everything that required for a project, a copper mine development project, with pretty good grade. And if you look at the overall tonnages on those historical resources, that's already in measured, indicated, and inferred at using a 0.2 copper equivalent cutoff. That's already 1 billion tons. That is a world-class number. So what we want to do is look at a more near-surface resource, and there's a lot of drilling required. We'll start with things that we can bite off, and then where will that end up with an updated mineral resource estimate? But we also have that area to the north where there could be a second project or a greenfields exploration project that we could work forward, which is about 6 kilometers northwest of where this historical resource is. I don't know if you got any comments on this resource here, Mark, but you'll be updating this for us, correct?
I will be updating this eventually. If you want to go back to that cross-section slide for a minute, I'd like to point out that right in the middle of the slide, you'll see grade models that come all the way up to the surface, and quite a number of grade shells there that are cut off due to lack of density in the drilling. And if you look at that area between 406,000 to the east and 402,000 to the east there, that zone in there is where I'm focusing our existing proposed drilling program, and I'm going to try to fill in some of that mineralized resource that comes to it definitely comes up to the surface in a number of areas, and then also look at some of the deeper potential, such as that 840 feet of 1.4%. That very significant intercept there, and no drilling above that zone. So we've got our work cut out in the Copper Creek district.
We do, Mark. I also want to focus on byproduct credits. So what you're looking at is predominantly it's a copper deposit with a little bit of moly and a little bit of silver. There are other byproducts that have been assayed that are relevant, that are present. The question is, at what price do you want to attribute to them, and do you include them into a resource on different sensitivities in different scenarios? Well, they do exist here, and Arizona is known as to have a lot of rhenium, for example, with the moly, and there are some other things that we're looking at. But can this assist in the economics on a copper equivalent number? So we're going to look at that as well, and we'll probably have different scenarios going forward. But certainly these are positive surprises that can add to the project. And if you look at the numbers here, it's hard to find a project that has, this much tonnage. And this kind of size for a project where it's situated. And to recap on the numbers, so far about $85 million has been spent here, 220,000 meters of diamond core drill data, various historical economic studies, metallurgy's been done here, already a few different studies, geotechnical work has been completed here, and not to be forgotten, an enormous amount of land assembly. We're talking about 10,000 acres of contiguous property, a good portion of which is real property acquired by previous operators. So to have that in Arizona, a 16 square mile component, and it's a low holding cost. Our cost for the BLM claims and the Arizona State Mining claims is about $80,000, and for the private property portion, about $50,000 a year in perpetuity to hold this. So it's about $120,000, $125,000 for all the holding costs associated with Copper Creek. Our office and where our core and everything else is stored, we actually own outright 3 acres of land in San Manuel. We have no mortgage and just a little bit of property tax to pay there. So that's important. This is a low holding cost project, and there's no joint venture or earning in or what have you. We own it on a 100% basis. The second project that Copper acquired is Contact Copper. And do you have any other finalizing statements on Copper Creek? Or we can get to the Q&A, I think, Bill, is probably more important at this point. And if you just let me just go over the details of Contact, we can then go to the Q&A, because some people might have some questions. But we acquired that from Anexco International. You can see here the chart of that company, and we bought that in the first bear market. And it wasn't an out-and-out sale, nor was Copper Creek. People should know that. This was a partnership. It was done for share equity. They had to buy into the business model. We did not pay cash. And they were, in fact, the largest shareholders of Copper Bank. That is the shareholders of the old company, Anexco International, which had, on a 100% basis, the Contact Copper Project, which is about 6,000 acres located in Elko County, Nevada. And it's got a pre-feasibility study that was published in 2013, and an area to the left here you can see called Copper Ridge that's actually basically never been drill tested. There may have been a couple of exploratory holes in certain areas, but certainly the areas we're focusing on have never been drill tested. And the reason we like this area is because of the incredible results that were encountered there in 2012. Outcropping copper, 1 to 12%, outcropping at surface, and it's only about a mile away from where the 2013 pre-feasibility study was completed. So if we're successful here with the drill bit, and these are incredible numbers, folks. You have to understand, where do you find these kind of grades? So this is all near surface. On a good portion of it is private property, located in Elko County. And if we're successful here, future resources that, if they're delineated, can be very easily attributed to that 2013 pre-feasibility study. So this is something of a lot of focus to the company, and this is not expensive to drill here. These are 100-meter holes. We need to answer some unanswered questions, but there could be a significant amount of value added to this copper oxide project. And if you look at the net present value of the projects combined, we bought them when copper was in the $2, $2.50 a pound copper price. They're not economic, but nor is, very few projects in the world are economic at sub $3 a pound copper. But when you look at the combined net present value of the portfolio, when you see copper above $3 or $3.25, every 25-cent move that we have in the copper price, we're able to capture, based on historical economic studies, about $300 million of net present value. So now that we have copper at $3.75, it's a line item. If we get copper in that $3.75 to $4 a pound sort of environment, there is a significant amount of torque. Our market cap is 28 million US dollars. So there's a bit of a disconnect there. So people are, in my view, we're going to start adding projects like this to comparables, and we are undervalued in every metric, whether you want to call it on a pounds in the ground basis, net present value to whatever copper sensitivity you wish, the amount of money spent on the portfolio, there's G&A to reserves that we have, or historical reserves. There are a lot of areas that I think people can find value, and certainly we're closer to the bottom than the top, in my opinion. Do you have anything to add on this slide, Mark? Maybe at Contact Copper, a project you were at when you were a much younger person?
Yeah, I visited Contact one time very early in my career, and I was pretty impressed with the area. I'm looking forward to getting back there and doing a little more detailed work on the project.
Very good. So let's get to the Q&A, and I'll just end it off with our royalty company. We're going to be moving Contact and Copper Creek forward, but the question is, if we're successful there, what happens? How do you monetize that? We've always talked about providing a return to our shareholders outside of share price appreciation. So as these projects move forward, and if you could use in the theater of your mind, there was some kind of commerce done at Contact or Copper Creek, then comes the royalty opportunity. Because now, because of this private property component and the ability for Copper Bank to attribute a 1 or 2% royalty to either of the projects, we now have comparables with a company like Nova Royalty, and what they're paying for 1% or 2%. The royalty company today has a value, but if we move the ball down the field and we're able to attract interest from whatever more senior party to either project, those royalties, if people can see that they're quicker to, on a discounted cash flow model, it's something you can actually see down a multi-year development pathway, there's a lot more value there. That's why we're branding it now. It is a business, and we could at any time create, let's say, a 2% royalty on both projects, and we can in fact spin that out and create our own royalty company as a share dividend for our shareholders. We can't eat our shares. We're very motivated to do this, and I think the market would have a hunger and an appetite for a little Pico Junior copper royalty company with the ability to grow, and our team is very motivated to realize that.